Hi, this is the weekly recap. As you can hear, I may have managed to fix the sound on my computer. So let's start with Baby Rhino. Baby Rhino just started on Friday and it's looking good. If we look at the projection for Friday, 1SD takes us to about 1529, 1530 and should be doing okay, although yeah, the Greeks should still be okay. So there's a chance that we would do nothing within 1SD of the current prices. Um, Ratios are fine right now. Let's go back to t plus 0. Ratios are fine. Maybe a little bit of weakness on the downside, but nothing really crucial in terms of ratios. Okay, the last week was actually very good because if I close, I don't think I will have Friday, but if we look at what we had on Thursday, this trade did very well. I closed it for about $600. Little bit of adjustments here or there, but actually not too much. Not too much. If you want to have a copy of this trade log, you can have it. Of course, it's no problem. Overall, not much to do. We entered probably around here, and then the market really congested a bit, but within a fairly narrow trading range, 1590, 1560. So overall, pretty easy. Okay, let's go to SPX. I could have actually skipped this video recording because there's actually not much to say. I added a PCS on the October regular between 925 to 950 to raise the expiration line. The delta is a bit too flat to contain a vol spike, as we've seen on Friday when the profit actually dropped probably around $100, $150. It has probably less cover in locally, probably around to 2950, but it's still doing pretty well all the way down to 2750, considering that the strong support, even if the market would drop rapidly, would be around 2825. The only thing is that it would definitely delay the exit, which I wouldn't want, of course. So I would say that if the market drops and delta starts going positive, I may add a safe CCS, probably about 1SD, so probably around 3100, 3125, 3150. That wouldn't yield much. Add about 50 delta, 50 Vega, unless I go slightly below around 3100. This one yields about 230. But overall, that's micromanagement, and I would suggest doing nothing. The sweet spot takes us to probably around all-time highs, so probably something to do in case the market shoots up, but at the same time, it is quite safe. We have about 3% guaranteed on the upside, so nothing to worry about. So in this trading range, and I can understand that there may be some jitters. I mean, the Fed injecting liquidities, still trade wars, the Middle East. I mean, there are still a lot of uncertainties, and I don't really see the market really taking off. So, in case the market then drops, and I invite you to watch the market outlook video, then we could add some CCS just to cushion the fall. That said, the CCS is not a good protection on the downside. If volatility shoots up, the CCS for which we would get about 1.2 would probably stay the same all the way down to 2950. So this is not exactly a quick way of making money. So the best is to do nothing. The sweet spot is there. This sweet spot is about um, T plus 14. So this is actually fine. This is more or less when we're going to be closing the trade. So doing nothing, which should yield okay, probably all the way to below 2900. Same applies to BTB by the book. Simpler structure because, of course, we have fewer adjustments at our disposal in this simpler variant. Also, no risk on the upside. A little bit more negative delta and less Vega. So this trade would actually contain a vol spike better. So if the market drops to 2950 or below, there's nothing to do. Of course, here we are, I mean, it's always a trade-off. Trading options is always managing trade-offs. So, of course, here we are at the very end of the sweet spot. so it would probably do better on the downside than on the upside. This trade is meant to be closed also shortly. Doesn't have as much uh, potential profit, but still 2.5%, $630. So that's still doing okay, and we could close it early just to be prepared for December. So really no worry at this stage. November is doing well. This is the regular trade. Of course, it has less cover on the downside, but it's still probably should be doing okay even if the market drops below 2900. So this one is safe, no adjustment planned. BTB's got a bit more theta because I went for a more regular upside structure when it was time to scale in. Yeah, it must be noted that the regular one still has some potential for a fifth Bruckmann butterfly. If the volatility stays low, probably a narrower wing size type of Bruckmann butterfly. Or I may go for a wide layer like an IC, but I don't see the need for that right now. So really, if not, let's have a look at VIX Central, flattish contendo. I mean, more contendo style that it has been. September volatility was very low. October is actually low as well. It doesn't look like, again, a reversal is in sight. That's it for now, and I'll see you later on Slack. Please note that next week, not this week, but next week, I'm moving south and I will be less available, but it's a good thing that while I'm moving and relocating, our positions are pretty safe. Okay, thanks for watching and see you a bit later. Cheers.